unless you're Warren Buffett or Charlie Munger, you probably don't want to spend days and days poring over balance sheets and annual reports to figure out about a company. Why not just invest into some ETFs that provide you passive income through dividends? And that's why I'm going to talk about VHYL over the next few minutes, take you through objectives of the ETF, its price, its performance, and then its distribution in both sectors and companies, and explain why I'm personally investing into it. Welcome back to the channel, and if you're new, I'm Mark of Desperately Seeking FI. We're on the Vanguard website, so we know that it's an ETF that we're trying to find, so let's go and have a look under what we offer, good ETF, and then we will just go through and find the FTSE All World High Dividend Yield ETF. So let's go and have a quick look at the fund details. So what do we see? We see what the current price is at 49.09 per share. The number of stocks within this ETF is 1,804 stocks, and we have an ongoing charge of 0.29, so slightly more expensive than some of the other ETFs that I normally talk about on this channel, and it has a risk rating of 6. Objective of the fund, once again another indexing fund looking to track the performance of the FTSE All World High Dividend Yield Index. Comprises of large and mid-sized companies, but does exclude REITs, the real estate trusts. And it is in both the developed and emerging markets and must pay a dividend that is above average. We can see inception date, so it's coming up on about 10 years old. It is a reasonably large ETF with assets of about 2.8 billion. It is also, as I love to say, a quarterly dividend payer. So let's jump over and have a look at the price performance. I suppose this over that rolling year shows how the fund or how the ETF has performed, and we're looking at in 17-18 slight loss at almost 4%. We're then up in 18-19, down again in 19-20, no surprise, with lots of dividends being cut over that period. A huge surge last year, and then a little bit more rebalancing over the last year. But if you think of what has happened to the rest of the stock market over the last year, we've seen quite a pullback over that period. Portfolio detail, VHYL looking at about 50% in the North American market, Europe about 25%, and then the remainder of that 25% in the Pacific and emerging markets. And that just breaks it down a little bit more, gives you a bit more clarity on whereabouts and which countries the holdings within VHYL are actually located. Once again, US being the major, but then into Japan, UK, etc. VHYL's weighted exposure, so this is the kind of sectors that we're invested into, very heavily into the financial, and that might be quite useful over this next period of time when we're seeing interest rates increasing and potentially the financial sector starting to make a little bit more money. Into the healthcare and then consumer staples. All really good things to be invested into as we go into this area of tightening of the belts and potentially into some form of recession. Let's wait and see what happens. And then the holdings, got some big names in there that we will all know. So you've got your ExxonMobil, your Johnson & Johnson, Pfizer and Home Depot, particularly weighted in America. This ETF has a dividend yield of 4.13, and that's a reasonably good, above average, and something, it's sort of the area that I would be looking at investing into to make sure that I'm getting a reasonable return. Still not beating inflation, which is currently running sky high in the UK at the moment. But at least it is something. And then if we look at potentially having a little bit of capital growth coming out as well, potentially we start to close that gap. One thing that is slightly higher on this ETF is its ongoing charge. So if you are on the Vanguard platform, it's 0.29% plus the platform charge of 0.15. If you're on something like Free Trade or Trading 212 or Invest Engine, you can potentially get full platform fees on those platforms. Are you investing into VHYL? Does it have a place within your portfolio? If it doesn't, what else are you eyeing up at the moment? So what are my thoughts on this ETF? I actually quite like the ETF. The cost, while it is higher than something like VUSA at the 0.29, what you do get is quite a good geographical spread across many countries, but also just the fact that there are over 1,800 stocks within the ETF really does give you that good diversification. You could look at other ETFs such as IUKD or GBDV, both that pay a slightly higher dividend yield, and if that's what you're chasing, that is fine, but they do have higher costs, and certainly IUKD from iShares does only have, I think, about 50 different shares within that ETF, so you have less diversification. But VHYL is definitely something that I'm going to continue to hold. If you're interested in doing a little bit more due diligence, you could have a look at this video, which takes you through some of the other best dividend ETFs that are out there on the market at the moment. Gives you an idea of what to go and have a look at. So I'll see you in the next one. Thanks for watching. Bye.